Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Oh, man, busy one. Jobs number obviously will be the lead story of the morning, but we have some individual news as well. We have news on Toys R Us, which is impacting trading in Mattel and Hasbro. We had some news on Snapchat. We've got GoPro, DPW, some earnings, and two guests for you today. First up, 8:15, Steve Sears, former Barron's columnist, going to tell us what his new venture will be on the show. And then at 8:35, we are joined by Chris Temple, publisher of the National Investor. Joel, how's it going this morning in the S&Ps? Are we trading up on the Trump North Korea news?
We're unchanged here, up a tick at 2739.50. Folks, I'm still talking the March contract here. We did roll to the June, but it'll be March. I'll have June for you on Monday. Pre-market low 2734. That's just above your daily pivot at 2733.25. So that's a level of control on the downside. Folks, on the upside for you mega bulls out there like Dennis, above the pre-market high of 2744.50, I see nothing until your 7-day high of 2762. So that could be a target on the upside. Looking at crude oil, up 57 cents here at 60.69, hanging in the $60 level. Crude, gold down 240 at 13.1920. Silver down a few pennies at 16.47. I'm going to bring in Dennis here, but first I want to give a big shout out to my nephew, Hayden Branch Buckfire, who is going to be having his bar mitzvah this weekend. Shout out to him. I know he's going to do a great job. He's a great chess player, great baseball player, and I know he's going to do a great job on the beamer there. And Emily's coming in this afternoon, so I'm excited about that too. So
big weekend.
Yeah, very big weekend. 33 people at my house for lunch tomorrow.
I'll be what do you do with 33 people?
I don't know what I'm going to do with 33 people.
You cater that in, I hope?
Of course, yes.
Or you do all the cooking on your barbecue?
Oh, yeah, no. It will be catered and a little help cleaning up, but looking forward to a big celebration for Hayden. He's skipping school today, so I don't know if he's listening to the show, but let's get...
Congratulations, Hayden.
All right, let's get to the markets. Dennis, you got to hop off about 8:27, 8:28.
I'm definitely trading this jobs number. I'll tell you that. I'm ready, rearing to go for the jobs. Let's do it. Do it.
So do we have some expectations, Spencer, for this jobs report?
I can give you some expectations on this jobs report. Yes, we are expecting a few things. So first, I'll give you the top line numbers there. Non-farm estimate, 205,000 jobs. The prior reading was 200,000. Unemployment estimate, 4%. 4.1 was the prior percent. We are also looking at, remember, average hourly wages. Wage growth was the largest it had been since 2009, last month at 2.9%. So we're going to be watching that number closely as well to see how that stacks up to the 2.9% reading from last month. So 205,000 non-farm estimate, unemployment 4%, 2.9% on the average hourly wages, which was last month's reading.
Now, remember, the financials are probably the thing that will move the most on the jobs report. Remember, they often move opposite to the market, too, because they want higher interest rates, unlike the market. So, well, just analyze from that perspective, utilities and defensive and REITs and interest rate sensitive stocks will move opposite to the financials as well. So that's, what's going to move the most off it. Ahead of the report here, sometimes you get a little tell. Sometimes you'll see financials getting bid. We're not seeing much here this morning. I mean, it is a very quiet morning. The S&Ps are basically flat. JP Morgan slightly in the green. I like to do my Bank America indicator. It's trading completely flat here right now. So nobody's really got a tell here going, at least early, on whether this can be a hot number or not.
No, you can't. And markets had a nice rebound off the lows, right, of the move. We're kind of really near the rebound high. I think that's up at 27.89. So the market, was shrugged off the tariffs, potential trade war, and now, interest rates are back in focus, at least for today.
Let's jump into individual stock news. There was a few reports here, but I'm going to go to this Toys R Us news first because give us the news here, Spencer. We got Hasbro and Mattel trading down significantly in the pre-market. Mattel is now down 6%. Hasbro was trading down $2.50 last night. Trading down, well, it's going to be down over $3 here, it looks like. So big fall here for Hasbro as well. Not good news for Toys R Us.
Isn't this old news?
Canada. They bankrupted Canada. So I don't know if they were in full, like I thought that too with the headline cross. I was like, I thought we already do that. But then they started hitting Mattel and Hasbro out. And anyways, Toys R Us is bankrupt in Canada, but now it looks like they're going to go in the U.S. too.
Well, the news is that these are reports from CNBC and Bloomberg that they may liquidate their U.S. operations. Toys R Us wouldn't tell us anything. They wouldn't confirm or deny, but safe to assume that probably correct.
Big difference, though, between bankruptcy and liquidation for Hasbro and Mattel. Companies can come out of bankruptcy. Obviously, they can reorg, they can do some stuff, work with the debt holders, keep the stores open. When you're liquidating the stores, it's telling me that, or if they do potentially liquidate the stores, it's telling me there's a lot of Mattel toys and Hasbro toys that aren't going to be sold in Toys R Us anymore. So that is the concern. Big difference between liquidation and bankruptcy. So let's talk Hasbro, Mattel, MAT, which was rumored to be these two have been rumored to be Mattel going to get bought by Hasbro on multiple occasions. You saw the big pop back in November when it went from $14 to $19. And then, it came all the way back down, and the merger rumors resurfaced in mid-January when the stock went from 15 to 19 again. Now it comes all the way back down. So you're coming into a major support area for MAT where it's bounced off of this multiple times. What are your thoughts here as we approach this $15 level once again?
Does Spencer have a lot of toys?
Spencer? Are you talking my Spencer or Spencer that's on the radio show?
Not me. Not me.
Yeah, but my Spencer gets all his toys at garage sales. That's how I roll. Used toys. Are we going to like the Play It Again toys or whatever it is? So we buy all used stuff.
No, you
Spencer don't care. So he doesn't get new toys. Only if somebody buys it. He likes the used stuff.
Like 2 years old.
So I don't get a lot. Toys R Us don't get a lot of money from me.
He's 2 years old. He'll care in a few years.
All right.
Yeah, once he finds out, that he's getting used stuff, he'll be like, when he's 5, he's like, I don't want any more used toy. I want a brand new.
I'm just thinking with that.
He destroys toy like a day anyways. He plays so rough. 3-year-old.
Okay. All right. We don't want to go into what kind of toys the other Spencer has here. So let's move on to what's
bad tangent here. Move to the
I have nothing to say.
Before you get us all in trouble.
All right. Let's look at Mattel here. And that went down to $14.75. The low in February is just below that, $14.32. We've gotten a little bit of a bounce, but it looks like you're going to test that $14.32. Certainly, liquidation is going to put some pressure, price pressure on these companies. So keep an eye. If we keep going to $14.96, keep an eye on $14.32. Hasbro, that stock is really, overall, that's been a much better performer than Mattel, and that is down $288. Your after hours low came in at 89.75. 90's really been the bogey there. 89 to 89. That was your low on February 6th. Match that with a 90.04. So critical level at 90 for Hasbro.
Jump over to our earnings stock from today, and it is Big Lots, and it is not having a good day. BIG weak going into the report, and very weak after the report. Trade down 10%. What did they say, Spencer?
Yeah, it wasn't great. Q4 EPS $2.57 versus a $2.43 estimate. So that's a good number. Sales for Q4 also okay, 1.64 versus $1.66 billion. But the guidance is the problem. They see Q1 EPS coming in at $1.15 versus $1.22 is the range. $1.31 was the estimate. Fiscal year EPS coming in pretty much in line, lower more or less, but the Q1 guidance is missed the estimate badly.
This used to be one of my favorite stores to go to, and I tell you, they just honestly, I don't like the way they've done it now. I always go in there, and it's basically like when some stuff gets damaged or stuff isn't selling well in the regular department store. Big Lots gets a skid of it, and I can remember like buying like aspirin and like the boxes, obviously it fell off the pallet or something, a whole skid, and all the boxes are a little banged up. And I'm like, well, the aspirin are still the normal inside. They sell me for like half the price. That's why it was exciting. It was like a deal place to go. But now you go in there, they got like nicer stuff. It's fancier stores. It doesn't feel like as much of a discount retailer anymore. And that's why I'm turned off of it, just on a personal matter. The market's turned off because of these numbers. And when you lower guidance in this market, it never is good. And this stock was kind of ugly going into it. So people may be getting a little bit of feel that Big Lots numbers weren't going to be that great. And the guidance is what is knocking it down here. Joel, find us some.
I don't know if I can. I mean, well, first of all, Angie Baby in the chat and FCC agree with you. It's just way too expensive now. No more.
Yeah, I used to go in there and you get, you go in for $25, $30 and get a cart full of groceries or a cart full of all kinds of consumer products that you need. No, it's like it's a regular store. They made them too nice. They lost their whole market to me.
All right.
The discount shopper like me, they lost me.
You look at pre-market charts in a stock that's down 574 and you think, yeah, maybe it's going to bounce here. You are working on a green candle here in this 8 o'clock bracket. The last few lows in this have been right at 47.40. So someone is making a stand here at 47.40 as we speak. That takes the issue back to levels that you have not seen since September of last year. And you had 2 monthly lows at 47 even. So as we stand right now, as this candle is turning a little green on us, pre-market low 47, 47.40 all the way down to 47 even, your August and September lows. I identify that as support. Really hard to find resistance on this. I mean, because you're trading down so far. So it goes into rally mode. Keep an eye on 49 even. That stopped it at the last previous, right around 7:30, 8 o'clock. You had a little problem at 49.
You do have a little dividend on this, 2.08%. I do like that support level that you're talking about there. When you go out to the monthlies, there is lots of support there in the 46, 47, 48 area. So you're coming into that support. So I probably wouldn't be coming here, even though I just dogged it, so I don't like the stores. And A.G. Penner saying, I remember 10 years ago, Big Lots and significant dimmer lighting in the store than the other big boxes. Yeah, they had dimmer lighting. You get the deals. It felt like now it just feels like another box store. So they lost their whole appeal to me. $47 though, major support. I'll give you that.
Better place to cover a short than perhaps to go long.
Sometimes. But BTFD, Joel.
Well,
don't forget BTFD. 17 minutes before the report or before the jobs number, I do notice financials starting to catch a bid just now. I'm not sure it's because I was just bringing it to the market's attention, but JP Morgan now up 20 cents. Citigroup just trading up about 25 cents on a flat tape. Bank America trading up a nickel here. It's just 0.1%. So financials slowly catching a bid here in the pre-market. Keep an eye on them if they keep catching the bid ahead of the number, because sometimes those financials just seem to know.
And the SPOOs are starting to leak here a little bit. Nothing major. We are red on the session. 34 even stands as your pre-market low. 33 and a quarter your daily pivot. So maybe some folks looking for a hot jobs number, inflation, and I would obviously be good for our banks. All right, Dennis, 45 seconds before our first guest comes on. I'm very excited about Steve Sears, former Barron's columnist. You want to cover one more stock here quickly?
Go to Marvel, MRVL. Full disclosure, I've got the Marvel spread on there, Marvel CAVM, but MRVL, so I'm long, but I am hedged with the CAVM because there's some risk arb going on there.
32 cents, beat by a penny. Sales $615 versus $610 million. So an okay Q4 number. Q1 numbers coming in higher. EPS was higher than the estimate. Sales was in line.
Breaking out on the chart before this earnings report. Has had trade pretty heavily around 23.5. So I'm interested to see because the chart looked good going into it. Sometimes these things can bounce back when the charts look good. So if if I'm just looking at it from that perspective, I kind of like it on a pullback.
And pre-market low, we'll throw that out. That was down at 22.67. Even though Wow. Three-quarters of a million shares traded on that bracket. So there was a big movement, but I like to see what happens at yesterday's low. We're right here right now. 23.62 was the low. We're trading at 23.75. So good candle yesterday. Now pulling back yesterday's low. Maybe you get a repeat of Thursday's session.
All right, 8:15. We're going to take a quick break and grab Steve Sears. We will be right back.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we got Steve Sears on the line. He's a former Barron's columnist, author, and Steve, how you doing today?
Good, great to be with you.
All right, and so you are starting a new venture soon in the fintech space. Can you tell us what you're going to be doing?
I have. After 12 years at Barron's running the striking price column, I left and I joined a company in San Francisco called Stratified Technologies, a fintech startup. And we basically take a lot of the principles and themes that I championed in my column and in my book, and we bring them to investors. We're working with investment advisors to show them how to identify risk in their portfolios that they may not understand or recognize. And then we use a variety of conservative options trading strategies to manage and define that risk. I'm really excited about it.
Yeah, I want to go into that more in a second, though. I just kind of had a professional question for you. Writing those Barron's articles every week. My Saturday morning routine is now going to be a little bit different without your striking price column in there.
Thank you.
But I've never counted the words or the time. I mean, I could tell you put a lot of time into those. Just typically, how many words are there, and how long does it take you? How long did it take you to do those columns?
You know what? They tend to be about 600 words.
Okay.
And which, frankly, it isn't that much. So what we had to always do is we try to synthesize as much information as possible, maximum economy of language for maximum impact. And it's hard to say how long they took to write, because after a while, and you'll understand this, I think a lot of the listeners will, the market talks to you and tells you what to do. If you can hear it, if you can hear the music that it makes. It's those days or those weeks when you can't figure out what's going on that were sheer torture. And a column that might take a day and a half to write could take several days. I've always had a couple of guys stationed at certain junctures in the market who, if I couldn't figure out what was happening or the messaging wasn't clear to me, I'd give them a call, and those guys would touch in excess of 90% of the flow, cash and derivatives. And that was kind of how I sort of set myself up.
Can you share any of those contacts with us, or is it kind of confidential?
That's pretty tough, Joel.
All right,
yeah, when he gives away their
sorry, Steve. All right, strike that from the
yes,
record.
and all of their phone numbers are. So
oh, really? Could you put them in the
or
chat?
Spencer's got to try to get every little scoop out of you there.
I slid it in there. Just kind of put them in the chat too.
I'll tell you the one thing that I learned over all the years, and prior to this, I worked at some of the derivatives exchanges, automating the markets, and then was at Dow Jones and the Journal prior. What I learned over the years is that, basically to try to focus on information that matters, which sounds like a very obvious thing to say, and have to tune out a bunch of the noise. which I define as information without any economic value. And that led me increasingly back to looking at my screens. And I've spent so many years now quietly looking at hundreds of tickers and indexes and vol patterns and things like that. And I rely on that quite a lot. But the key message out of all my experiences was that there's in the derivatives market in particular, there might be 20 or 30 people who know everything, and they know what's going to happen before it happens. And then it kind of pyramids down, it gets bigger. But I always try to focus up on the top as an analyst and a columnist and a reporter, and it served me well. A lot of these guys, they would say, we'd have a great conversation. They go, look, you can't quote me. And I was like, and I say to them, listen, I don't even know your name. I just recognize your voice, And those are the types of people that were very helpful. But a lot of what I did, I think you can do if you just discipline yourself to read the tape and to read flow and vol, fundamental economic analysis, and to know when it's a moment for single stocks, when it's a moment for indexes or ETFs, and vice versa.
Steve, I couldn't agree with you more here just on the points you're making. Dennis Dick here. I've been a prop trader for 18 years with Bright Trading. And I could tell you this applies to this market more than anything because I've seen the evolution of the markets. And, everybody will say high-frequency traders dominate this market. I will tell you that high-frequency trading is noise. And you need to find out where the real players are, where the real order flow is going. That's the whole trick. I mean, if Warren Buffett is coming in and buying a stock, you can kind of, you don't know it's Warren, but there's a real buyer in there. You can see, in the flow and the tape that institutional flow coming in. This isn't the noise of high-frequency trading. Most of high-frequency trading is market-making arbitrage, just keeping the market efficient. Where you've got the big money, the big players are really what's moving the market. So, you could say 18 to 20 guys. You may be absolutely right. There's those big firms that are going to be moving the money in and out. And as a day trader, if you can identify those big fish ahead, just by reading the tape, there's definitely money to be made there. So completely agree with you on that point.
Yeah, I mean, one of the things that fascinates me, frankly, is that only something like 7% of the average daily volume in stocks, and that's also going to apply to options, I suppose, is related to fundamental investors who are analyzing stocks and trying to figure out. So I think it's worth X today, and I think it'll be worth a Z, tomorrow. The high frequency guys are kind of like, street muggers in fancy suits, darting in and out, trying to take advantage of ripples. And it's a fact, and they're very powerful. And how they can distort the tape. But I think everybody knows that you can make a friend at a time. It doesn't have to be your enemy. And if you can pick certain themes and you can ride them, and then this high frequency stuff becomes just that. It becomes short-term distractions or short-term noise. And you can sort of position on those waves because the computers, as smart as these algorithms are, they have their limitations. And I've yet to meet one algo guy, as rich as Warren Buffett or successful as Warren Buffett. And he sort of uses something, I think a similar methodology.
We're on the line with Steve Sears. He's a former Barron's columnist, author, and now moving into the fintech space. Tell us about I know you've worked at exchanges, you've done different things. When we spoke the other day on the phone, you talked about one thing that kind of, puts you on the map, some investigative reporting. Could you just share that story with us?
Yes. When I was a young reporter at Dow Jones Newswires and the Wall Street Journal, I've been asked to cover the options markets. We'd never covered it before. And I've always been fascinated with understanding what went on in the market. Like when I was a kid, I remember seeing at the end of the day, one of the newscasters would say, and that, today the Dow Jones Industrial Average, rose or fell by whatever. And I wanted to know what happened inside the engine room. And I had this fascination, and the editors said, Sears, go out and cover options. And I said, what the hell is that? Like, we don't know, but we think it's important. And at the time, trading was dominated by 4 or 5 floor-based exchanges. Dennis will remember this very well. I think so will you, Joel. But all of them traded the big blue chip names exclusively. So I think Philadelphia was at the Philadelphia Stock Exchange. Microsoft was the Pacific Exchange. the American Stock Exchange had Intel and so forth. And so I was so curious why these weren't multiple listed, like in the stock market. And I called up somebody who at the time was working at the CBOE, and I said, well, why is this? And the response to me was, and I quote, this isn't a story, which of course, if you're a reporter, you know that's the first sign of a great story. And then two, they said, well, you can't force people to compete if it's not economically viable for them to compete. So wrote the story about how they weren't competing amongst these names and how there seemed to be something called the gentleman's agreement amongst the exchanges to not compete. Published the story. The very next day, the Department of Justice's antitrust division launched a massive investigation of the options industry. It took 3.5 years. There's an antitrust investigation. The Securities and Exchange Commission, the supposed watchdog for investors, jumps in. They launched their investigation. There's class action litigation. Net, what happened is all of these options, which had been single listed, were then multiple listed on all the different exchanges. And the regulatory framework of the entire industry changed dramatically. Now, the benefit all of this had to individual investors was that spreads in the difference between the bid and ask, in many instances, shrunk about 75, 80, 90%. All of this became a precursor to penny spreads. And that changed the entire nature of the options market because those great mom and pop trading firms, the local firms at all the exchanges, basically got either got very big, like Susquehanna, for example, and Wolverine, or they got very small. They sold their books. The guys went on to do other things, and the big banks came in. The options market traded about 1 million contracts a day in 2000, and now it ranges roughly between 17 million to 25 or 26 million contracts a day, with the upper end being related to big events like jobs or something. So that was it. And then I had the chance to, a lot of interesting things came in. I wanted to follow that story through. And I went to work with Sandy Fruscher, now the vice chair of the NASDAQ, to turn around and restructure the Philadelphia Stock Exchange. And as I tell my mom, options have been very, very good to me.
All right. S&P's just took a quick dip here, going into the number. We're about 2 minutes away here. We just went down and made a low at 32.75. It's just under your daily pivot. A little nervousness here ahead of the jobs number. I had one other good question for you here. I will start it in. I may interrupt you when the number comes out.
Sounds good.
You wrote a book, The Indomitable Investor, and in your column, you didn't stress like, oh, do this and you're going to make a ton of money. You're looking to ways for people that lose less money or people to make money in a conservative way. And I think that's kind of like the approach that Dennis and I have taken in our investing in our trade portfolios. And just go into your book and then just your overall philosophy. And I'm probably going to interrupt you in about 1.5 minutes.
I'm ready to interrupt you. So when I was a kid and I was trying to understand options trading, and it was a time when you could get the masters would just say, call me back at the close. And the greatest traders in the world would walk you through this. So one day I was working with somebody. We were going through, various structures and pricing them and the importance of the cost of capital and, in your trading operation. He turns to me and says, listen, he goes, bad traders are trying to make money. He says, good traders are trying to not lose money. And to me, it was like a eureka light bulb went off in my head. And I took that because we're not all traders. I made it into what I call the good investor rule, which is basically to swap out trader with investor. And I'm telling you, for me personally, it changed my entire approach, my entire analytical framework. And that's what I basically wrote the book about. There are a bunch of different ways to make money. People come to the markets. It's like Willie Sutton, why do you rob banks? Because that's where the money is. But the machinery, the marketing machinery of Wall Street wants people to always be sort of off balance, looking for ways to make the most money possible. And there are oftentimes plenty of ways to do that. Bitcoin's a great example. There's always a hot biotech stock or something like that. But I hope you guys would agree, and I think you will, that in this game, longevity is really what matters.
Street,
because we all know so many
Spoos, the street leading the wrong
number
way.
Is out. Numbers out.
Ahead,
non-farm payrolls 313,000 versus, remember, the estimate was at 200,000. That was also the prior reading. Private payrolls coming in way higher, 287 versus 191. Wow. Whew. Did they blow away those non-farm and private payroll estimates? Unemployment for the month, 4.1% versus a 4% estimate. 4.1% was also the prior reading. Still waiting on average hourly wage growth. But, wow, they way higher than the estimates there.
And boy, oh boy, street leading the wrong way into this one, Steve. They sold it off to 27.30. Now we're 17 handles above that. So you could have, if you were brave enough, you could have picked up something real cheap on the open. We just hit 49 even. No major resistance to meet at 27.62. That's a ways away. Sorry to interrupt, Steve, but please could you just finish with your thought.
Well, aside from that, focusing on ways not to lose, the other thing that we all know to be true, and this proves it today, buy fear. Sell confidence and buy fear. And if you had the wherewithal to get long, there's a lot of stuff that people are just dumping because they're doing macro trades right now. If you talk to the guys on the various trading desks, all people want to do is trade ETFs and indexes, and that's driving options volatility. What that does when this sort of stuff happens, fear seeps in. These guys just start dumping stuff willy-nilly. And you were talking about the financials earlier today and a variety of other stocks. There's a lot of good, strong names that I'm almost certain will be higher in a year from now if things continue to go the way that they seem to be, with rates rising and the economy knocking it out on all cylinders. Okay.
And just before we let you go here, just, any strategies, for this kind of market? I mean, we definitely have went from a low grinding higher market to a little bit higher volatility. I think for me, the way I look at it is, you got to bring, really for this bull market to continue, you got to bring the vol in a little bit and get back to, your slow, steady climb. Just any comments on changing trading strategies in the current volatility environment as the SPOOs bust over 27.50?
You know what I think, and I've advocated this for so long in my column, I think it's still a great bedrock strategy in these conditions. Cash secured put right. If you're going to buy a stock, sell the put. You got the vols have come back a little bit. They're higher. They're stickier. You're going to get paid for it. Might you get assigned? Absolutely. So you only do this in stock that you want to own. Could you buy calls on a variety of things to try to catch these moves? You could. And I know a lot of people are doing that. But vol's in sort of this weird spot. It's like, it's not super expensive and it's not super cheap. It feels like there's regime change. And I think that sort of, those strategies are good ones to play it.
All right. We got a question from our chat, Steve. Let me pull it up real quickly here. There's our chat. Do you suggest to buy and hold or to constantly prune your portfolio? This is a question from Rob Hood.
I think that's a key question. I suggest both of them. One, I don't believe that most people are actually true buy and hold investors. I think instead they sort of, they greed in and panic out. I think the key thing to do here, and a great way to do it, you'd be like, you find a stock that you want to own, get the options market to pay you for buying it, sell that cash secured put, get assigned, or do the trade again, and then watch it and assemble a carefully curated portfolio of stocks that you can hold for a long time, but that you can curate with puts and with calls. That's kind of how I see it. And look, like certain stocks are great. Like Altria, Mo was great right after the financial crisis in 7, 8, 9. Paying a big dividend. It was trading in the 20s. It's now about 50. And anybody who bought it then did great with it because it doubled, right? But now as rates are rising, it's not that great of a stock in my mind. So what you've seen is it can't really push above 50 now because people are looking for better rate plays. And the big divvy stocks, of course, are rate sensitive. So that would be an example. Like, is it buy and hold? Yeah, but for like 10 years. And now I remember Ace Greenberg, the late Ace Greenberg of Bear Stearns, he wasn't a big believer in buy and hold. And if he saw a stock, the market was going up, for example, and a certain stock was going down or not, tell those guys to sell it. And at the end of the day, the guys on the desk would have to come tell them about their positions. And the old man said, look, just dump it. If it's not going up, dump it. Right. And I think too often you see people get sucked into these buy and hold names like that really hurt them.
Steve, we're bumping up against it did. We're bumping up against the clock here for our next guest. Thanks so much for coming on. Great information. And this might be better having you on Benzinga's Pre-Market Prep maybe once a week, once every 2 weeks, instead of reading your column. So we're really we're
I had a blast. Glad to do it.
Yeah, we'll be talking to you soon. Steve Sears, former Barron columnist, now venturing into the fintech space. We'll talk to you again soon.
Happy investing, guys. Thanks.
All right. We're running a little bit behind the clock here. Quick recap here.
Wow.
Wow.
Wow. This is huge, Pop.
Yeah.
I mean, they were leaning the wrong way. I was kind of leaning the wrong way, too, because you usually get that tell ahead of time. And I'm like, I'm ready to hit everything. And I'm like, whoa, back up. And they started buying it, and they have not stopped buying it here yet. We are now up, 25 handles from the low here on this number.
28.
Just recap it one more time for our next guest there, Spencer. Give us the numbers one more time.
Recap the numbers. Okay, I'll do our average hourly wage growth, which is not the issue. Last quarter, just 0.1% month over month increase, 2.6% year over year increase. So not huge there. The actual numbers, again, let me pull it up on my Pro real fast. Non-farm, 313,000 versus 200,000. Unemployment, 4.1 versus 4%. Private payrolls, 287 versus 191. So private and non-farm way higher than we thought. I'm going to pull in Chris Temple on the fly here.
Okay.
Financials have just blasted off in the orbit here as well. Citigroup, JP Morgan, Goldman Sachs up over 2, Fox Bank America trading up 1%, Morgan Stanley up huge. I mean, they've all blasted off here too. And if you look at the TLT, is taking a little bit. It's down a bit here, but there's buying across the board in a lot of stocks right now.
And were you able to get a hold of anything, Dennis, even though you're leaning the wrong way?
Yeah, I covered some hedges, but no, I didn't do as well as I could because when you have expectations coming in and you see it leaning, and I'm leaning that way, it happened so fast. I'm like, I really should have been keyed up the other way, and I wasn't. I was thinking it was going to be soft, and I was thinking, that the market was giving me a tell by falling 50 cents ahead of the number, and that wasn't the case. So that caught me a bit.
Right,
didn't lose money, didn't make it.
I'm going to interrupt here and introduce Chris Temple, who is on with us now, editor and publisher of the National Investor. Chris, thoughts on this hot number?
Well, it's something else. The most important thing, I think, and you guys may have already discussed this, was that the wage growth that had accelerated backed off a little bit. Otherwise, we might not be looking at the future scorching higher right now.
All right, Chris. We want to. We got a little bit of an echo here. Let's just start about the implications for interest rates. I mean, your opinions, this number, you were thinking there's a peak in the long-term rates. This kind of confirms that. What sectors does this make you lean towards, and which ones does this make you kind of stay away from?
Well, first of all, it's historically when you reach a peak in a rate cycle, long-term rates always peak before short-term ones. And I think there's a host of reasons why this year we'll see a peak in long-term interest rates. And because of that, I think that you need to look at those areas that have been beaten up recently. I'll give you one quick example, guys. Last December, I recommended that my members sell preferred apartment communities. The symbol is APTS. They're based in Atlanta, great growth profile. They're mostly in apartments, necessity anchored shopping centers, and with grocery stores and that kind of thing. We had made 150% total return in 3 years. The stock had reached $22 last December. It recently was 14. And I told people to buy it back, because even if we've only seen 85% or whatever of the rise in long-term rates, that's close enough for me. It's got a 6% nearly dividend yield, great growth profile. And that to me is a no-brainer for both a nice income and capital gains going forward, because believe you me, when we get to the point, we're not there yet, that everybody else in the market wakes up to the fact that growth is going to slow. The Fed is going to have to stop its normalization, which may not be till next year. We don't know that yet. But when that happens, you're going to see good utilities, good real estate investment trusts really take off, because the markets will flip right back to risk off mode.
All right. I want to just discuss with you the tariffs. I mean, that has been the big talk starting, last week with the president. They're finally, signed, sealed, and delivered now. Overall effect of this, I mean, trade wars, reviving the old economy. I mean, where's the president going with this? And, do you think this is just like kind of like a bargaining chip, or he's going to be moving strong in this direction?
I really do think it is a bargaining chip, Joel. I think that, even when he first announced this, immediately some of the commentary at least said that this is leverage he wants to use against Canada and Mexico where NAFTA is concerned. And he's already backed off by, at least for the moment, cutting them out temporarily of these tariffs. I think that so far, we're the 13th or 14th month of Trump's presidency, all along on trade and these issues, his bark has been way worse than his bite. I don't think the market should be too obsessed over this yet, but I will say this, that if I'm wrong, and this does start a protracted tit-for-tat trade war, I think people are looking at the wrong potential outcome. Everybody's worried about the inflationary implications and that type of thing. I think a world choking on huge levels of debt, having a little bit more trouble recently, especially in places like China, keeping some decent momentum going to this so-called synchronized global growth that we've had. I think that if we had a major trade war, for whatever brief time that the worries were about inflation as a result, we would quickly be talking about renewed global recession and therefore deflationary fears if a trade war really gets cranked up.
All right. Now, I know you don't trade or follow Bitcoin that closely, but you did recently recommend a blockchain company, and just wanted to see which one that is and what potential you see for it.
Well, I did. This is kind of a flyer, but I got a good introduction of the company. It's called Black Cactus Global. BLGI is a symbol, little tiny penny stock on the over-the-counter market. I'll tell you what I like about this company is that the head guy, the president, Lawrence Cummins, is not a guy who last week was selling iced tea or the week before couldn't raise money for a gold mine anymore. This guy at the end of 2017 was named to be part of a UN blockchain commission to help developing countries get their heads around blockchain and make it work for them and their small economies. So this is not a fly-by-night guy who just came to this. If you look him up, folks, I beg you to do it. He is one of the geniuses in the world on this technology. Nobody is paying attention, however, to the company. BLGI, again, is the symbol.
All right. Well, if you buy it here at 17 cents, right, you know your risk on it. So just kind of been quiet the last few days. Rob Hood in the chat, if going back to the trade wars and whatnot, if we reduce our trade deficit to some degree, who really does it benefit?
Well, here's the thing that, I characterize part of Trump's discussion of this issue in the first place. This is like Archie Bunker and Barney Hefner down at Kelsey's bar. They're all upset that their buddies are losing their jobs. And yes, they've identified symptoms, but they don't address the problem. What the biggest thing that the president just doesn't seem to get, and I think he's got a lot of moral and political high ground on this, don't misunderstand. But when the United States of America, for the last 70 some odd years, has had the world's reserve currency, part of the definition of having the world's reserve currency is that you run trade deficits with other countries. That is how, in the first place, they accumulate dollars for all of their global trade. The dollar, of course, represents 60-some% of every single transaction on this planet. And that's been that level for quite a long time now. So built in to the U.S. having the world's reserve currency is we run trade deficits. Now, are there ways in which we're dealt with unfairly? Yes. Should the president be going after intellectual property theft and other things in China rather than what is, in the grand scheme of things, fairly inconsequential? Yes, he should be doing that. But again, this to me, I think, I may be proven wrong, is a bargaining chip. But I think that the problem with our chronic trade deficits, besides being part of the role of having to reserve currency on the planet, is something that is far more complicated and far more intractable than anything that is going to be cured by these tariffs.
Chris, what about the run in steel? I mean, we got a pop off, these tariffs coming in, and then yesterday they actually were selling off on it. So we're seeing steel trade up a little bit here this morning with the announcement there yesterday. Thoughts here, because if you look at a stock like U.S. Steel X, or you look at Nucor, they've had pretty good runs here in the last month. I mean, X has come from $32 up to 44. Is this all priced in, or is this still room to run if these tariffs do come in?
I'm going to look at it a little bit differently, because sure. I think that a lot of the give and take on this, just like in the markets recently, when all of a sudden we have a two-way market again, there's been speculators and will run something one direction or the other, and later on, rather than looking at some issue as an explanation, it's merely an excuse. I think that the questions where U.S. Steel, and look at how copper has weakened recently, look at the oil price backing off recently, I think that more than people want to understand, there are some growing concerns about the durability of this synchronized global growth that we've had. And so for me, far afield from the issue of tariffs, I think, are we really going to get a decent infrastructure bill? That seems to still be in limbo. And is the potential trade war that's developing, or some other issue? Look at how PMIs have rolled over in China recently. Are we seeing broader reasons why some of these basic materials, metals, and cyclical stocks have lost a little bit of the mojo they had for a time last year?
Coming out of the chat from Angie Baby, referring to the Trump policies, do you think that he'll push the default currency to Asia in the next, we're going here on a 30-year time frame? That's the way she's thinking. Do you think that's the way, the economic system and currency is heading?
My view has been for a while, Joel, that we're going to have kind of a multipolar world. I'm not sure that we're going to necessarily have some one currency that's going to replace the U.S. dollar. I think that we're going to go more, and this, I think, is part of the direction the president wants to go. I don't know that he understands the currency part of it, but we're going to have a multipolar world where we have the dollar is still king of the hill in this part of the world. The Chinese yuan starts to assert itself. Of course, the euro, in my view at least, remains a wild card. There's a lot of problems that could come there. But I think we're going to have a multipolar world. I don't think anybody is going to make any rash moves right away. For all of the talk about China's going to retaliate by dumping treasuries or doing this or that, I'm sure most of our folks saw recently the news that they bought more treasuries net in 2017 than they have in several years. And again, why? Because they have a huge merchandise trade surplus with the U.S. And as a consequence, they have to recirculate some of that into dollar assets.
We've been on the line with Chris Temple. He's joined us here via Skype of the National Investor. Chris, great macro information. We need that kind of stuff. We talk a lot about technicals, but drilling down into the macros is something we want to do more of. And there's no one that breaks it down better than you, Chris. Thank you very much, and we will speak to you soon.
Well, thanks. Take care, guys.
All right. S&P's 58.75 is a high. I was kind of looking for 27.62. That's still within earshot. That's your 7-day high. And if you even want to look for more beyond that, and you want to go based on the 9-day average trading range, 27.82 and a quarter. That would be the target based on that 27.30 low. Dennis, you came back from vacation. You were a little bit, fuzzy, and I figured I knew I wanted to get out of that bet down there, and you wouldn't.
It's starting to come up for me now here, so we're looking. I'm 5 points away, so not even like far 5 points away, 4.5
you're 50
points,
handles.
45 points.
Yeah, you are. How about a Diet Coke and a bag of chips instead of the stuff looking for?
No, you're not getting me out of this bet. So that's it. I think it's this BTFD. the BTFD guys, you know, and you know, you got to have that one consideration here is nothing's going to go straight there. Although it almost tried to after I made that bet with you and we rallied 70 points in 3 days. I mean, you now got to look at this market and say 5 days ago we were down at 265. 3 days ago in the pre-market we were trading down SPY 268 with the resignation of Cone. So now you look at it, we're up basically 75 handles in 3 days here. Am I chasing this market now? Now you're I don't know. It's gone a little bit too far too fast. It's been such a choppy market. I almost think you got to wait for a pullback here again. Yes, we're up, and yes, we're hot. Yes, maybe it does continue here, but this market's given you multiple chances in the last month and a half. So I'm not chasing any moves.
All right. Spencer, was something you wanted to throw in there?
No.
Okay.
Not really.
I thought you were going to say something there. All right, so let's talk about the financials there. Bank of America's traded 500,000 shares, trading up 29 cents at 32.49. I just remember that this one, the high of the move, and it looked like it was really going to bust out at test 33. 32.85 has been the recent high of the move. That was buffeted by a 32.77 high. That's at the end of last month, February 27th and 28th. So keeping an eye on Bank America. Did we do all of our earning stocks? Do we have any left to cover?
There's a lot of other news here.
Let's go to news.
Just to talk about. But we had Pay, we had a Finisar. Finisar we could cover quickly because it is a significant mover here this morning. Right. Let's go to Finisar numbers, and then we're going to come back to all this other news. FNSR report, Spencer. They actually sold it off ahead of the report. So this is an interesting tape yesterday. They rallied it all morning, and then they hit it hard all afternoon. So maybe somebody got the memo in the afternoon because Finisar did disappoint the street, and it is trading down and giving back all of its gains from the last week.
20 cents versus 23 cents on the Q3 EPS. Sales 332 versus $333 million. Q4 guidance coming in light. EPS guidance 9 to 15 cents versus a 22-cent estimate. Sales coming in light also, $300 to $320 million versus a $334 million estimate.
I'm torn on this one because didn't this have some news that they were going to be getting some more revenue from Apple? Wasn't that back in December?
Yeah, that was back in
December. What was that news back? Give me that headline again because it's going to matter with, whether I'm buying this dip or not. Back on February 12th or no, I'm sorry, December 12th or December 13th, you had a big pop in the stock from 20 up to $25. There was something announced with Apple that day. What was that? Go to the Pro because Pro have.
I'm gonna dig in the Pro. What was the date again? December
12th. The stock was $19.89. The next day it went up to $25.41. And my goldfish memory is saying there was something to do with Apple announced that day. And I'm wondering if what is that announcement? First of all,
they announced $390 million award from Apple.
Yeah, from its Advanced Manufacturing Fund. So
they got an award from Apple. That doesn't necessarily mean they were going to continue to get a stream, but the market seems to think that there was obviously going to be something more with Apple because pricing it all in there. Now you're down 3 months later, you're down to 18. I just look at the chart and I say, holy cow,
I agree
this is all major support down here. I mean, you have bounced off this level if we go out to the weeklies multiple times in the last 3-4 months. I mean, 18 has been huge. You could say it's down to 17 in February. We actually got down all the way to 16.64. But just, Harlan Pine style, what level just jumps out at you when you look at that chart? It's 18. I'm not surprised stock is trading right here at 18 right now.
Yeah, no, you could see that. That level jumped out at me too. Interesting on the dailies. When you have that news, it's always great to receive. Maybe you don't trade the stock that day when the news came out. You spiked to 25.41 and you closed at 23.70. If it was like the killer, that was the news, that was the breakout, and there was going to be a gap and go. Traded 47 million shares that day. Couldn't even hold the close off the open. It opened up 24 even, 24.08 high, but immediately began to leak, and then you see what happened here after the report. So, good news is, sometimes an opportunity to, take some profits and not necessarily just go with the trend. Gold is getting hit here on this, 13.1670, down $5. Silver is in the red as well.
jump over just to the ratings because there was a few interesting ones as well. We got AKAM getting upgraded at JP Morgan. We got Kohl's catching an upgrade at Cowen. That feels way late to the party. ACIA, this is a big one here. Acacia Communications, that is getting downgraded to underweight, which is equivalent to sell at Morgan Stanley, and that is trading down 5% on that rating change. We talk Acacia, ACIA. It's one we talked about before for a while. Haven't talked about it in a while on the show. Thoughts on ACIA as we pull back $2?
I don't know what they think about the company. What they were using this opportunity to exploit the gap fill that it had from earnings. You talk about textbook here. You had a gap on, it had to be earnings on February 23rd. You had a 41.84 close with a 41.50 low. You gapped down $4 to 37.13 was the high that day, and then you ended up leaking all the way to under $35. On the rebound here, you need to get to 41.50 to fill the gap. They made sure they did that. They took it to 42.35, and now we're trading back down. Initially hit at 40.37 and now kind of holding in. 41, yesterday's low, that will be resistance. If you're trying to pick a bottom in this one, folks, just be aware that your 2-day low is down under $39 at $38.98.
Also, Match.com, MTCH, catching a downgrade at Wells Fargo. That's just to neutral, basically. I think market performs what they call it. It's down $1 here. MTCH was getting pumped by Kramer a couple days ago. It's just been run so far. $25 back in November, now 45. I mean, the trend is your friend, so you definitely got that on your side. But now it's like getting lofty here. I think, this pullback here. Yeah. Maybe people buy the pullback just because this is the kind of stocks that continue to turn around right away. But this one's been a high flyer.
Yeah, that on a 1, 2, 3, 4, 5-day winning streak that took it from a low of 38.48 up to its all-time high at 44.50 yesterday, with your all-time closing high right there at 44.36. So if you do go into rally mode, the close and the all-time high right at the same level here. Angie Baby's noting TLT is on the move, and I mean, it's down 82 cents, but that's still been kind of...
It's not surprising, though. It's a hot number. So your TLT is going to be getting hit. I mean, if there's any excuse to raise interest rates here, they have it now. So rates are going up. And that's going to hit your TLT. That's going to hit your utility stocks. Look, XLU, it's trading down 0.5%, which is a big move for that. I mean, utility stocks have been in the dumps for a long time. I am underweight utilities in my portfolio. I do want to get some more utilities in there eventually, but I just don't feel like the urgency to put those on. Southern is one that I had in my portfolio for a long time. I've always played it like the 40 to 50 area. I sold it all out at 51, 52 back in November and December. Glad I did that. And now it's back here near to where I bought it originally, which is at 40. I do think eventually I'm going to get a shot at 40, though. So it's 43 right now, just because the entire sector is so out of favor. Makes me think that I'm going to get that shot still. And that's why I'm holding off on buying any utilities right now.
Okay. Verifone had numbers after the close. Pay, how did they do?
Pay reported a Q1 adjusted EPS 23 cents, which was in line with the estimate, and sales of $425 versus $419 million. Guidance from Pay, EPS guidance for Q2 coming in a little light, sales guidance coming in a little light, fiscal year guidance coming in line on both the EPS and the sales, but light on the Q2 guidance.
Had a spike down to 17 even. You have rebounded. I think for this, you're trading at 1780. Your last 2 days lows are 1783 and 1786. So if it holds there, I think you got a chance. The close is right there at $18. Let's say, this gets over, 18 early in the session. I think, they'll take this thing higher. Your 3-day high is 1838. I just under the 1780, though. I think I just have to cut it loose pretty quickly because your next low is 1741, and then no major support until you get to a triple bottom from the end of February and early March at the 1650 level.
Just third.
Yeah, I was going to say, where are we at in imbalanced land? Probably a lot.
Yeah, they're mixed. it's actually just because this information, one thing you got to consider is that this information gets posted at 8:30. So now you got a jobs number coming in. So institutions are going to slowly make their way into probably putting more buy balances in. Because right now I see a lot of sell balances. I don't think that holds. I think they're all going to be buy balances by the time 9:30 rolls around. So like what we initially see when we see the 8:30 numbers is the early institutions that throw their orders in there ahead of time. And those guys are there at 8, 8:15, 8:20. Now, later institutions, when the numbers really change, come in around 9:25, 9:28, 9:29, right before the market opens. So that's why you'll probably see a lot more buy balances come in. There's a few, though. Alibaba, 50,000 to buy. Just looking, JP Morgan, 55,000 to buy. Not surprising. Financials are going to be strong here this morning. And if I'm looking for themes, you got to play that theme. The TLT down, financials are strong. So obviously they move opposite to the TLT and they want higher interest rates, where anything related to the TLT does not. So utility is going to be weak. REITs are going to be weak. Dividend sensitive stocks are going to be weak. So that's, one thing that if you're trading here this morning, you've got to consider.
All right. Pre-market high stands at 58.75. My big number on the upside, top one on my sheet, is your 7-day high, 27.62. Beyond that, the high of the recent move was 89.75. I have an 82.25 target. I guess if you're trying to buy a dip here, a little bit, like to see a pullback into the 27.40 handle. Mid-range on the session's 27.44.50. So if you are shorting into this or you're looking to buy a pullback, I'm hoping they take 10 points off this pretty quickly off the open. All right, Spencer, you want to wrap up today? I thought we had a couple great guests today. I thought great information.
Totally.
Fun show. Dennis traded the number, good information. Looks like we're wrapping up the week on a good note. So tell us what's on the docket for next week.
On the docket for next week, we have, starting with Monday's show, Samantha LeDuc. She runs LeDucTrading.com. Also, Kenny Glick is joining us on Monday. Tuesday will be an interesting show. We got Nick Shaheen, and also we have Gil Beta. Gil runs Comcast Ventures, the venture capital arm of Comcast. They just invested in 2 blockchain companies in the last 3 months. So we're going to talk to Gil about how he separates a good blockchain company from a bad one and what their plans are as far as blockchain goes. We've got Evan Schneidman on Wednesday from Prattle. They're, of course, the text analytics company. He's going to kind of break down what the Fed is saying through their words and kind of trying to understand the deeper meaning there. Murata Askar will join us, otherwise known as Futures Trader 71, on Wednesday as well. So we got a jam-packed slate of guests next week. Mark Chaikin, Tim Melvin will also join us later in the week. So that's what's going on next week. If you want to catch any part of any show ever, you can go to our podcast on iTunes, SoundCloud, and Stitcher, or just go to youtube.com/BenzingaTV. Thank you to our guests today, Steve Sears and Chris Temple. Hope you all have had a good morning, and you hope you have a good rest of your day and a good weekend, and we will see you folks on Monday.